Hi, and thanks for watching this Finance with Excel video. In the last video, this is the second one in the series where we're creating the Excel workbook that will help us to estimate our federal taxes, our federal income taxes. In the last video, we worked through our deductions and exemptions to figure out how much income we actually owe, or how much of our total income we're going to end up paying in taxes. And we had for this hypothetical person who is married, filing joint, with two dependents, makes $60,000, donates this much to charity, and whatnot. Like, what is their total tax income going to be? It's going to be $25,000, $25,700. So, in the United States, we have a progressive tax system. And what that means is that the more money you make, the higher your tax rate is concerned. And I went and pulled these numbers right here for the 2016 tax year. And this gives you the marginal tax rates for the various incomes and the various different housing or filing type. So if you're single, you on the first, and the way this works is, for example, if you're filing single, on the first $9,275 that you earn, you pay a 10% tax. On the income between $9,000 and $37,000, you pay 15%, and on the income between $37,000 and $91%, you pay 25%, all the way up to $415,000, and anything above $415,000, you pay 39.6% in taxes. So what we need to do is we need to figure out, based on all of this income, on all of these numbers, how much your particular tax liability is going to be. So what I'm going to do is I'm just going to create I'm just going to reference the previous table. So taxed income. So our taxed income from the previous worksheet is going to end up equaling whatever is in this cell right here. And I need to know the filing type, because that lets me know which of these three groups, or these three tax structures, we're going to end up paying on. So the first thing that we're going to do is we're actually going to go ahead and compute. I'm just going to call this the max tax paid. And what this is going to calculate, it's going to calculate if your income was exactly this much, what would your taxes be? So if your income is exactly $9,275, then your taxes are going to be 10% of that. Now, what if my income's exactly $37,650? Well, what I'm going to end up doing is I'm going to end up paying 10% on the previous amount, which means I'm going to end up paying this much on the previous amount, plus I'm going to end up paying 15% on the difference between this level and the $9,000. So on all my income between $9,000 and $37,000, I'm going to pay 15%. So that's going to be $5,000. And then actually I can drag this formula all the way down. And the reason why I can do that is because right here, so suppose my income is exactly $91,150. Well, what I'm going to end up doing is I'm going to end up paying this amount on the $37,650, because we already computed that. And then on the difference, so on the $91,000 minus the $37,000, I'm going to be paying this 25%. So we can just drag that down. I don't really care about the decimals. And I'm just going to actually copy and paste this for all three of these filing types. Alright, so now what we need to do is we need to figure out, based on this, so if my taxed income is this number right here, and I'm filing married joint, how much am I actually going to pay in taxes? So what we're going to do is we're actually going to compute our taxes for each of the three different categories, or each of the three different types of filing, and then we're going to just pick the one that matches our filing type for the amount of taxes paid. So the way that we're going to do this is we're basically going to create kind of a calculator that what it'll do is it'll calculate our base taxes. Well, it'll calculate our tax bracket and then where we're going to go. So what we're going to do is tax bracket. So what we're going to do is I'm going to create an if statement. I'm going to say equals if this number, so our threshold is less than our taxed income, make sure you anchor on that, then give me our max tax paid. If not, give me a 0. And we'll do this for all of these. Next thing that we're going to do is we're going to do taxes paid. And what this simply says is, so this right here is indicating where, so which one of these tax brackets we're falling into. So we do have income that falls into this tax bracket, and so we're going to be paying this entire amount. So the next thing we're going to do is we're going to say equals if this number is not equal to 0, then give me the maximum tax paid. If not, give me a 0. And then we're going to drag this all the way down. And so then we now need our marginal rate. So what it's going to be is, so we know that some of our income is going to fall in this tax bracket, and then the rest of our income is going to fall into this tax bracket. So the one just higher than that one. And so the way that we're going to do is we're going to say if this, so if our taxes paid is not equal to 0, then give me the one higher tax bracket. If not, then give me a 0. So we drag that down. So now what we have is we have a calculator that will tell us basically what it says is our base taxes. So on the initial amount, we're going to end up paying $927 on $9,000 of our income, and then we're going to end up paying a 15% rate on the difference between our taxed income and $9,000. So now we just need to do that. So we need to calculate our base. And that's just going to equal the max over this entire range right here. Because if our income were higher, like let's go and let's move our income up to $100,000. And we can see now that if our income is $100,000, we have a taxed income of $65,000, which means that we're going to end up on the first $37,000, we're going to pay this $5,184, and then on the rest of our income in between $65,000 and $37,000, we're going to end up paying this marginal tax rate right here. So then the next thing we need to do is we need to, so this is our base taxes, so we're going to end up paying $5,183 on the first $37,000 worth of taxes. And so then, and actually I made a mistake real quick right here. I apologize. This is not supposed to give me the maximum tax paid. This is supposed to give me the threshold for the tax bracket. There we go. Okay, so then we know, so now in this, if we pull the max, so that now if we pull the, if we want to know how much of our income is going to be taxed at this higher rate, so we need to know our marginal rate, and that's just going to equal the max over this range. And then we need to know the amount of income that's taxed at that rate, so extra, or we'll say additional. And then what this is gonna do is it's just going to equal our taxable income, which comes from over here, minus the max from this tax bracket range. And so what this shows us now is that we're going to end up paying $5,183 on the first $37,650 of our income, but then we have $28,000 worth of income that is going to be taxed at this 25% rate. So our total taxes are going to end up equaling this base plus our marginal rate multiplied by the additional income that needs to be multiplied by that tax rate. So that's going to be our taxable our total taxes if we were married filing single. Now, one thing that's kind of nice is we can just click, we can just highlight this whole thing, and then if we make sure that we line it up in the same way with each of these other two, we can just copy and paste it, and then it will give us our taxes. it will give us our taxes for each of these other two. But if we look, we can see that I kind of messed things up because right here I forgot where I was anchoring on. I forgot to anchor on the income. So we'll go ahead and recopy and paste all of these. And so now we can say, based on all three of the different regimes, if we are single filers, this is what, with that income, that's what our tax is going to be, married joint or head of household. And we can see that single pay the most taxes, married joint pay the least in this situation, and head of household pay that. So what last we're going to do is we're going to create a little lookup table. So it's going to be single, head of household, married joint. So if we're single, then our total taxes are going to be that. If we're head of household, our total taxes are going to be this number right here. And if we're married joint, then our total taxes are going to be this number right here. So now what we need to, last thing we're going to do is your taxes is just going to equal, we're going to use a VLOOKUP. So we're going to look up this number, this married joint, which we drew from the other phase. We're going to look it up in this table. We want to bring back whatever's in column 2, and we're going to say false. So now we have all of the numbers that we need. So this will say if we change our income at all. So let's change these numbers. Let's do a bit of formatting to clean this thing up a bit, and then dollars and that, and then we're going to turn this into percent. And then these I want like that. I want to get rid of the decimals. So now what I'm actually going to do is I'm going to copy and then I'm going to paste formats right here. And there we go. So now I've just cleaned up a little bit what these are. And I'm going to put a circle around, a box around these just to make things a little nicer. So now this calculator right here, I'm going to rename this tab Your Taxes, or Taxes Paid, will end up calculating exactly how much taxes you owe. So now let's do taxes owed, and then we're just going to reference this to this taxes paid work document, and then we can see, and then let's format this. So now we can see that if you have a taxed income, so this person right here, married joint, and so if we change this, let's say you were single, and if you're single, you obviously don't have children, in as far as your filing is concerned. If you're single and this is your situation, let's say all these are zeros, and you're going to take a standard deduction, you contribute a bit to your 401k, you've got some student loan interest, you're going to be able to deduct $14,000. So you're going to end up paying $17,000 in taxes on your $100,000 income. So tax rate is going to end up equaling that your taxes owed divided by your total income. So you have a total tax rate of 20% if this were your situation. So now we can see, based on this, we've now calculated what your taxable income is going to be. Based on your taxed income, what your total taxes owed are going to end up equaling. Join us next time.